Good morning. It's the 22nd of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right?
Yeah, good. Thanks. You have a nice weekend?
Yeah, not too bad.
Good.
Yeah, it's weekend of a little bit of sport, a little bit of riding
Yep.
the peloton.
How was that?
That was long.
I had a long
Our
ride.
our first one was about an hour on Saturday, and then I did 45 minutes yesterday. The 45 minutes yesterday was the tough one because I just, wasn't in the mood for it. But
Yeah.
I thought I'd just do it anyway. I was trying to watch Your Honour in the background,
Oh, yeah,
and
we've watched that. It was good.
yeah, sort of. I think we're episode 6 or 7. Yeah,
I
pretty.
doubled up on the pain yesterday, so I was on my bike. Thought, okay, I'll get 90 minutes in on the bike. So I watched football while I was on the bike. So I was sitting there, all set up, watching the football. Half an hour in, Arsenal are 3-0 down. I'm just like, oh my god, how do I get out of this?
Well,
Yeah,
but it was downhill from then on, wasn't it?
it was downhill from then on. Yeah, so after I got off the bike, I think it was 3-1 when I got off, and then
Yeah,
watched the rest of it indoors. And yeah, pleasant end in the end, but yeah, worrying.
yeah,
Never
yeah.
mind.
Next match is Liverpool, isn't it?
Is it?
I think so. A couple of weeks' time.
Oh, fantastic. Looking forward to that already. Okay, so back onto the markets then. And then for anybody that may have noticed, we've got a new logo, new shiny logo
Yeah,
on the top of the screen.
yeah,
Yeah, that's been done because we have been acquired by a company called Acuity Trading, which is all very exciting.
yeah,
News which has been released today, and there's information available on our website and elsewhere, LinkedIn, etc. But all very exciting, hey, Steve?
yeah. It brings an additional element to the analysis that we provide as well. They focus really on a new sentiment analysis, and combining that with the technical analysis that we provide, I think we're really excited about what sort of products we can bring out with various data sets. So all new things coming your way in the not too distant future. So it'll be
Yes,
very,
indeed.
very good.
Yeah.
Really exciting. New
Uh,
chapter.
yeah, indeed. So onto the news this morning. So a bit of drama in the Turkish markets overnight and over the weekend. The President Erdogan ousted another central bank governor a few days after a bigger than expected increase in interest rates, and has replaced him with an advocate of lower borrowing costs. And the lira tumbled as much as 15%, and bonds and stocks fell as well. Feels a bit dictatorish, doesn't it?
Yeah, I think it always has been when you look at Turkey. But,
Yeah.
yeah,
Yeah, he
exciting
doesn't
times there
agree.
as
Get
well.
rid of him. Yeah.
Yeah.
Um, On the corporate front, we've seen Saudi Aramco, which obviously the world's largest listed company, they'll pay an eye-watering $75 billion dividend. That's even after we've seen a plunge of 44% in full-year profits last year. So that's pretty massive, most of which, of course, is going to the Saudi government. And the state-owned firm said that energy consumption is improving in some regions, including its main market of Asia, and it predicts that global consumption will be almost back to pre-virus levels by the end of this year. Another story bubbling under is the tensions arising between Europe and the UK over vaccines. The European Union are ready to start withholding COVID-19 shots from the UK as the bloc seeks to catch up with their inoculations. The EU has contracts in place with AstraZeneca, and apparently they're not being respected. That's according to an official who warned that any vaccines and ingredients produced in European factories will be reserved for local deliveries. So expecting Boris to jump on the phone today with Ursula von der Leyen, and try and iron this situation out, because it threatens to upset the harmony between the UK and Europe yet again. So keep an eye on that.
Yeah, I mean,
Anything else?
one of the interesting things about that is that I think it's lipids or something, lipid fats. Is for the AstraZeneca vaccine is produced in the UK, and they rely on that. So there could be a bit of tit for tat if that story is to sort of explode. So there's the UK, if they were to sort of like stop the export of those lipid fats to the AstraZeneca, they would that would cause a collapse in the supply in a couple of weeks' time. So it isn't nice. They've got to sort of just get, sit down, sort it out, and try and make it fair, I suppose. So
yeah. I guess that's why obviously we've seen these record-breaking amount of people vaccinated in the UK over the last 3 days as well. They're just pumping it into arms as quickly as they can before the Europeans stop it coming over.
Yeah, it's sort of a little bit ununified like. But then, we're not unified anymore. So no. It's a case that's, what a lot of countries are doing. They're becoming very sort of like insular and sort of looking after their own. Maybe it's not the way to be done, but that's what's happening. The only other sort of like story that's really sort of quite interesting is the NatWest facing criminal proceedings over the money laundering scandal. Just a few details coming out. Apparently there was one bank account which took deposits of 365 million over the period, over a 5-year period. 264 million of that was cash. Now, I don't know how much that equates to a per day deposit, but someone's definitely taken their eye off the ball at NatWest. It saw 4 men convicted of delivering up to £2 million a day in cash.
Wow.
Both the NatWest and the FCA declined to confirm or deny reports. The investigation centred on a gold trading business called Fowler Oldfield in Bradford, which was raided in 2016 and saw 4 men convicted of delivering that to £2 million a day in cash.
Right. Fascinating.
Maybe they're just, growing gold in the gardens and just selling it to passers-by. Who knows?
Yeah, possibly.
It may not be ill-gotten gains. We don't know.
Well, the shares are up today nearly 3%, so they're shrugging that off.
Right. Okay.
Not really caring too much about that by the looks of things. Okay, so what's going on with the markets this morning? We've seen a few triggers on our signals go off today, so I guess it's been a fairly choppy start. What are you seeing on your charts?
Yeah, pretty choppy indeed. Obviously, I like to look at these sort of like the longer term or shorter term, medium term charts. This is, that's not a weekly, get that to a weekly. This is a weekly chart. So last week didn't look too healthy. We had a hanging man candle the week before and almost a hanging man candle last week, although I'd prefer the tail to be a bit longer or the body to be a bit shorter. So we're seeing this level around 68.10 in the FTSE being tested once again and failing. And we're off to a negative start this morning. If we look at the DAX, that's looking a bit like a shooting star. And again, I'll have to sort of like revert to this morning's price action. We have seen prices over the weekend. You get weekend markets were negative, and we started off on a negative footing this morning. DAX, we got triggered on this morning selling a break. But that has been stopped out just now. So the last hour of price action has been more positive. That's a bullish outside candle and a pretty strong looking one as well. The FTSE has posted a bullish hammer candle. Again, it's tested the 66.50, which has been a significant level in the past of support, and it's reacted quite aggressively higher. You'll see the same across most of the indices. CAC bullish hammer after testing, but we'll still have to see how this plays out. Bullish outside candle on the Dow. Nasdaq a little bit more muted. We're in this corrective sort of channel at the moment in the Nasdaq, but it's running into this heavy hourly resistance on the cloud. S&P's again bullish outside candle on the hourly chart, but really needs to get above 39.15 before we get excited about that. Moving to commodities, crude oil continued the sell-off last week. We posted a nice bullish hammer and then a reversal last week. Evening star formation or evening hammer formation, evening hanging man formation if you want, and that's looking pretty negative still for crude. So potential for further downside. We reacted from a low of 58.27 last week midweek and got a nice rally out of it, under pressure again, trading around $61 this morning. The Brent crude is trading around $64 this morning. So again, similar sort of evening hanging man formation. Never really heard of that, but that's what I've just told you it is.
Coined a phrase there.
Yeah, why not? On the gold on the weekly chart, we've seen a couple of weeks of positive price action, but we're on the back foot this morning. Prices have moved from 1740 down to 1730. I think we're looking to sell a break in that around about 1722 this morning as well. So the shorter term chart doesn't look as good. On the 4-hour chart, I was looking for this inverse head and shoulders last week. I thought we're getting a nice retest of the neckline, but we're still under a bit of pressure. So this could be a little bit of a sort of corrective channel, and the trend line, if the trend line holds, we could see this break again aggressively lower, looking for really a break below the 1720 level for that to trigger. Silver just following gold at the moment. Levels to watch in here, 25.35. Then if we get a break of the 24.80 level, $24.80, could be in trouble. Copper holding up quite nicely. Let's look at the weekly chart in copper. Looking a little bit toppy, really. You've got the shooting star, hanging man, and at that last week's hanging man engulfed the previous week's price action, opened where the previous week closed and closed where the previous week opened. So that's engulfing that price action. Really need to see a break of $3.97 for us to get a bit more excited about that, but pretty nondescript this morning. On the yield front, we're seeing US 30-year yields trading around 2.40 to 2.4%. 10-year yields still hanging around them high levels. 1.75 is the high. We're trading around 1.68%. And the 10-year European yields are starting off negative this morning, negative 0.321. I think that's me covered on that. The only other one really to look at is what's going on with crypto, hanging around the $60,000 level. Still feel that this may be a bit toppy up here. Hanging man candle posted last week, maybe, but all sort of down to whether we can punch above this all-time high of 61,750. A little bit negative to start with, but I wouldn't sort of bet against it.
No, definitely not. Okay, thanks, Steve. So, I mean, looking at the charts, lots of gaps everywhere. I noticed from the Sunday night opens on various markets, currencies, commodities, etc.
Yeah.
Let's have a look at some of the currencies and start with, starting off with the baskets. So at the top there, we've got in blue dollar index, which continues to be quite robust. It was a little bit higher this morning, but it has dipped off a touch. More interestingly, I think we're seeing a bit of a cooling off in some of the riskier assets like Aussie dollar and New Zealand dollar. Which have dipped off quite a bit this morning and have been last week. And also the British pound has had a little bit of a dip as well. We are seeing a little bit of a perk up in the likes of the Swiss franc and the Japanese yen, which typically are viewed as safer haven currencies. So that looks quite interesting, and maybe a sign that we are about to see a bit of a rotation in foreign exchange. But let's have a look on the individual charts. Okay, so first up, dollar index. Again, back to this formation, talking about a potential rounding formation taking place here. A breakout of the 91.60 level was quite interesting, but we have seen
Can't hear you. You on mute, Joe. Lost you.
Hear me now, Steve?
Yeah, I can hear you now. Yeah.
How much of that did you get? Someone called me on
Yeah.
my phone.
Yeah. No, just sort of like a little bit.
Sorry about that. Okay, some engulfing candles around here, and quite a bit of chop, but there may be a bit of a breakout here, forming a bit of a flag potentially. So looking for a continuation higher in the dollar index, and targets are up here at 9,400 to 9,450. Looking bullish today, off of the highs, but we'll see how that plays out. Looking elsewhere, Aussie yen. See a massive rejection here at on the 18th of March. We broke out to new highs, but failed to hold on to those, closing back below the resistance level at 84.95. And since then, we've seen a bit of a sell-off lower. Big old gap to the downside today. So if we look at that on the intraday charts, just bring this one up, get rid of this. So you can see we closed here on Friday, and we opened here on Sunday night. So that's quite a considerable gap. You don't often see them that big. I mean, what we're talking about, 55 tick gap. So quite punchy. And obviously we're trying our best to close that gap today, which is up at 84.23. Haven't quite done that. Got a little bit got quite close there at midnight, but have sold off.
Yeah.
So,
I mean, for me, when we sort of like talk about gaps as well, I quite like to think about more of the daily gaps rather than the hourly. And if you look at a daily chart on that, there wouldn't be the gap would have been filled. So for me, I'd be.
So you go by the close of the.
Well, I'd go by.
Or you go by the wick.
Yeah, I'd go by the wick. I'd go by the low and the high, and
okay.
Just on a daily perspective. But the hourly chart gaps, you still have to respect that sort of thing if you're trading from the hourly perspective. But it wouldn't be so much of an issue, I don't think. That daily gap is a big issue. Yeah.
If you maybe tighten that up a little bit, little gap and go. So obviously the next target on the downside is the big old trend support line, which has been in place since October. So keeping an eye on that. Aussie dollar, been speaking about this for a while. Potential head and shoulders top pattern taking shape here. We saw a nice rejection at the underside of the broken channel on the 18th of March, and then we've seen a continuation lower. Next big test is down at 76.21. If that gives way, then I think we're completing that head and shoulders top, and at which point we're targeting a move down to 72.35. If we look at euro dollar, inverse of what we see on the dollar index, we've got this breakdown here, a little bit of a retest with some choppy price action around here, ultimately looking for a continuation lower on euro dollar as well, down to sort of 116.95 as a sort of first target on that one. I guess if we can see a break below that low from the 9th of March, then we're really starting to look more negative on that. If we look at cable, that continues to trade within this bullish trend. We've got support here at 37.59. If that gives way, then obviously we can probably say that channel has been invalidated, and therefore we could see an even deeper correction to the downside. Taking a look again at these New Zealand dollar currencies, big old engulfing here, or outside candle posted on the 18th. Testing now, or about to test this uptrend support line. If that breaks, then I think that may trigger some decent profit taking in some of these New Zealand dollar currencies. New Zealand US dollar potentially forming a bit of a top. Keeping an eye on that level there. I think 70.99. If that breaks, then I think we're looking at a decent move to the downside. Dollar yen continues to fail at this downtrend resistance that we've been speaking about at 109.36. So some signs maybe that yen is starting to strengthen a touch following a huge period or bout of weakness that we've seen there. So that's looking quite interesting as well. But all in all, I think I'm sort of more positive about the safer haven currencies than I am about the riskier assets like the commodity currencies. So be cautious, I think, is the message at the moment on currencies.
Totally.
Okay, data today. We've got US Chicago Fed National Activity Index, which is due at 12:30. Again, their clocks have changed. Ours don't change until next week, and when it'll be back to all the data coming out around about 1:30. At 2 o'clock, we've got US existing home sales. So a couple of bits to keep an eye out for today. On the gun to the head stuff from Friday, Steve, you had a nice winner on Dow.
Yeah,
Hit target.
Yeah. Happy with that.
2.75 R. And I had a 0.36 R win on New Zealand dollar Japanese yen. So all in all, that was a pretty good day for us. I think, Steve, that might be you at new highs on your P&L.
Get in there. No looking back now.
21.12.
I'll be like the stock indices of last year, just like keep making
roaring
new highs.
Yeah. All right, lovely. Okay, well, go on then. What you got today?
Oh, no idea now. Thing is, at the moment, I am a little bit negative on the indices for obvious reasons. We're very overextended, but the sort of like reaction in the last hour questions whether it's the timing would be right to sort of get involved right now. I've already sort of like sold that on a break this morning, got stopped out, so I'm leaving that alone for today. So that moving away, that I sort of made my mind up as I spoke. Then moving away from that, then the only other real sort of like options I like to look at are the oil or the gold. I suppose for me, let's look at this 4-hour chart in the oil. Bit of a bearish flag forming. That really sort of like we could have a stop around about 61.75 there, looking for a break lower. Obviously, we've sort of like if we do get a break of the 58.57, then it sort of really opens up the downside, and we're sort of like trading a bit sort of quite volatile in this little few hour period. So on the hourly chart, you've also got the benefit of a Ichimoku cloud there. So I could even bring the stop in a little bit tighter, so my target doesn't have to be as far away if I'm going to get good risk reward and trade management out of it. So yeah, I'm going to go for it. I'm going to sell oil at 61.17. I'm going to have a really tight stop, 61.37. How does that look? That's really tight, isn't it? I feel a bit uncomfortable with that. 61. Let's go 61.47. And I'll leave the target at somewhere nice and rounded, 59.27 maybe. I mean, that's a pretty punchy trade, isn't it?
That is very punchy.
So
got to get a stop above the cloud, haven't you, surely?
If I was like sensible, I would do. But obviously not being very sensible, I think I'm going to go for it, Joe. You know what I mean?
Yeah.
New highs, blue skies, new highs, and all that. So you're talking me out of it. I know you are.
No,
61.17. I'm sure. Stop at 61.47. You heard it here first, and then targeting 59.27, which feels like a reasonable target, which has been supported quite well recently.
Boom.
Done.
Good luck. I'm going to take a look at Aussie US dollar. This is the daily chart, and as I mentioned a moment ago, I think there's a head and shoulders top forming here. It's only a potential one because it's not an official head and shoulders top until it breaks the neckline, which for me, I prefer it to be horizontal rather than sloping. So I would say a break of 76.21 would confirm that. So I'm jumping in ahead. We've got a gap lower this morning. Arguably, we've filled that. So I think now we can see a little bit of a sell-off. If we look at the intraday charts, I've got a nice little channel here, which we broke, and looking to test the underside of that now. So I'm going to sell it at 72.26. And I'm going to target move down to 76.20. I'm going to tighten this up. Why not? Let's just get it 35 ticks. So 77.62. Looking for 3R on that one today.
Go for it.
Cool. So went through the data. What else have we got? Central banks again on the docket. We've got an appearance from Fed members Powell, Barkin, Daly, and Qualls, all spread out for over the day. So we could get some commentary out there, obviously continuing to talk about the situation with regards to inflation and yields. Other than that, I think we can wrap it up, Steve.
Nice. Okay, mate.
Cool. All right, well, we'll be back tomorrow morning, and until then, trade safe.
Yeah, cheers. Bye.
Have a good one. Bye.